Hello and Happy New Year. I'm Robert Killen, Director of the Lane Small Business Development Center, and this is our first Lane Business Update for the year 2021. It is Monday, January 4th, and today I want to talk about the new stimulus package that has finally passed through Congress and has been signed by the President. We're still waiting for some of the administrative details to come out of the SBA for the business-related items, but it's important for you to think about them, to figure out whether or not you want to apply so that you can be ready. As we know, the first time around when the really juicy opportunities came, they were nabbed up very quickly. So you're going to want to be prepared. So here are some of the important changes, because this is a positive change all across the board. Here are some of the important ones. The first thing, and this applies to even existing PPP loan holders if you haven't already applied for forgiveness. The first thing is they've added new types of eligible expenses. The first one, and probably most notable, for businesses with employees who have group insurance. You weren't allowed to utilize your part of the group insurance, that expense to the business, as part of your payroll, which seemed weird, but that's the way it was set up. You now can include your group insurance expenses as part of your payroll deduction, which is the value in that is that it makes it easier for you as an employer to reach that 60% threshold that you have to meet for forgiveness calculations. In addition, they've added many different types of business software as an eligible expense. And the reason they did that is because businesses had to change how they did business, and much of that required new software updates, so they've now made that an eligible expense. And finally, and this one is very specific, they've added property damage as an eligible expense if related to public disturbances during 2020. Now, 2020 brought some really difficult times, and some businesses took it in the chin. We have some businesses in our community that got hit multiple times by public disturbance. Those repairs can now be paid for with PPP proceeds, so something to consider. In a different topic, if you have a loan of under $150,000, they've identified a new procedure for forgiveness, a simplified forgiveness application. It's not out yet. It's supposed to be out within the next couple weeks. So wait to apply until that simplified application becomes available. It should make it much easier for you to get full forgiveness of your PPP loan. One thing that really bugged me about the first round was that if you received an EIDL advance, and if you remember, that was $1,000 to $10,000, $1,000 per person up to 10, you could get as an advance on an EIDL loan, whether or not you got the loan, and then it would become a grant. Many people, many organizations got that either $1,000 to $10,000 grant. Well, if you got an EIDL advance and a PPP loan, what I was really disappointed in was that the way they wrote it is that if you got the PPP loan and you got it forgiven, whatever amount you got forgiven, you would have to subtract that EIDL advance from the forgiven part of the PPP loan, which effectively meant that anybody who received both an EIDL advance and forgiven PPP dollars, that EIDL ended up getting converted into a loan over on the other side. And I was just really disappointed in that. They've remedied the error. So now EIDL advances no longer need to be subtracted from the forgiven amount of a PPP loan. So that's excellent news. For the new second round, because you can apply for a second round of PPP, much of it is the same, but now you have to have 300 or fewer employees, and that's going to, all of you most likely are going to still fit within that restriction. And you'll have to be able to show a 25% reduction in revenue between comparable quarters, 2019 to 2020. You get to choose. Was it second quarter, third quarter, or fourth quarter that you saw at least a 25% reduction in revenue? If you can show that, then you're eligible. So those are the new eligibility requirements. There are some other things that are new entity types that are allowed. They've added 501c6s, at least some 501c6s, to be eligible for PPP, which is really exciting for my chamber friends. All of the chambers of commerce are 501c6s, and chambers are specifically made eligible. In addition, destination marketing organizations, which were left out last time, are allowed this time. So another good benefit. And they've also created a greater opportunity for restaurants or any business with a NAICS code of 72. So for those of you who don't know, a NAICS code describes the type of business that your business is in, the area, the sector. And 72 are typically food service, so restaurants, hotels, caterers, and the like. The change for those types of businesses is that for a new PPP, instead of being 2.5 times your 2019 monthly average payroll, because that's what the PPP was designed to provide, is 2.5 times your average monthly payroll for 2019. That is your loan amount. If you're in that food service sector, you can get 3.5 times. So effectively, you get 40% more. You can get up to 3.5 months worth of payroll as a PPP loan. So a huge benefit to that sector that has obviously been kicked in the teeth through all of the restrictions as a result of COVID. So we're glad to see that. Another real benefit is that the taxation question is now a non-issue. There was a concern. Well, it wasn't just a concern. The IRS was very explicit that the way things came out the first time, if you spent PPP dollars on expenses in your business, and then those PPP dollars were forgiven, you would have to pay taxes on those expenses. Right? That's what the IRS was saying. That has been eliminated. The Congress made it very clear that expenses paid with PPP are deductible whether or not the funds are forgiven. So that's a huge burden that was lifted off a lot of CPAs and tax professionals because they were having to share that news and it wasn't pretty. So that's excellent. Two other programs that are related that you need to know about. The first is the Employee Retention Tax Credit. This is it is a bit more complicated process, something you'd want to talk to your CPA or accountant with about, but the Employee Retention Tax Credit, or ERTC, has been improved, so it is more beneficial for a business now, and you can have both PPP and a tax credit, which was not allowed the first time around. So you can do both. Now it is complicated. You're going to want to talk to a tax professional about it, but it is definitely something to consider, especially if you have several employees. Definitely something to consider. And finally, the EIDL. Now, I haven't got the details on this. I read through the document. Now, understand that the original CARES Act was 888 pages long. This document, this revised document, is 5,500 and some odd pages long. It's a huge document, so we will be surprised by this document for months. But here's something that I was surprised when I read it. Regarding the EIDL, the Economic Injury Disaster Loan, if you remember back, there was talk in Congress by some congressmen that they had expected every business to get $10,000 as an advance on their EIDL, that everybody would get $10,000. Now, to me, that doesn't make sense because there are a lot of businesses that don't earn $10,000. And until you create some type of filter, anybody with a valid business could theoretically get $10,000 for free. That didn't make sense to me. I know some of you feel otherwise, but that's okay. But what they've done is they have, in this new legislation, they have said that if you are a business in a low-income area, a low-income community is the language that is used, you should get that full $10,000. So if you got, say, $2,000 before, you should get another $8,000 now. Now, I haven't seen any articles about this. I haven't seen anybody talking about how this is going to work. I think there's a lot of potential risk here, but it is something to monitor. And I'll keep you informed as I find out more. As soon as we have details on how low-income communities are defined and whether or not any business within a low-income community will get $10,000 as a grant, I'll certainly let you know. But that's just something to remain aware of, or keeping an eye out for. So, apologize I went long today, but there's a lot in this new legislation. It is much improved over last time. It's definitely something to take advantage of, or at least consider. If you have any questions about it, leave them in the comment boxes below. I'm happy to engage in conversation. You can reach out to me personally if you'd prefer, and we'll chat. So until next time, be well. Again, happy New Year. Let's hope that 2021 brings us some beauty that we were just too stressed to acknowledge in 2020. I hope your 2021 goes beautifully. Take care. Cheers.